Tariffs are vital to our country. And just so you know, other countries use them on us, but I just used them a lot better. We're in a much better position. We have trillions of dollars coming into our country. If we didn't have tariffs, we would be a very poor nation, and we would be taken advantage of by every other nation in the world, friend and foe. We're not going to let that happen.
The U.S. economy is facing a make-or-break moment.
And our country's becoming very rich.
Key economic data is painting a murky picture. Inflation has so far defied the worst of economists' expectations, and the U.S. consumer remains strong. But pockets of weakness in the labor market and slower growth are raising red flags.
I think most economists expected this summer to really be that period where, you begin to see the effects, and I think we're right at that doorstep.
So why has the U.S. economy remained so resilient despite Trump's steep tariffs? And are the cracks beginning to show? Let's first take a look at where President Trump's tariffs stand. The administration significantly hiked tariffs on virtually all U.S. trading partners on August 7th. Some major economies like the European Union, Japan, and South Korea face a 15% tariff, while others like Canada, Switzerland, Brazil, and India face much higher rates, upwards of 35% to 50%. China is on a different track than most other nations. Its tariff rate is set to soar unless a deal is reached.
For the world, what percent will that tariff be? I would say it'll be somewhere in the 15% to 20% range.
We started the beginning of the year at a 3% average effective tariff rate. If you were taking the initial Liberation Day tariffs and you calculated out what that would mean, it could have been as high as 15%, which is a 5x higher than where we were before. Right now, we have to see where we're going to land. We do expect above 10, right above that 10% average. And so what this essentially means for us is that it could be inflationary. Trump's tariffs haven't fueled a massive spike in prices yet, although there's evidence they're starting to leave a mark. The Consumer Price Index rose 2.7% in June when compared with a year earlier. The core measure, which excludes volatile prices like food and energy, rose 2.9%. That's a modest uptick compared to previous months, although still above the Federal Reserve's 2% target.
This will not turn out to be inflation because we'll make sure that it's not. We will throw our tools, make sure that this does not move from being a one-time price increase to serious inflation.
We have started to see the effects of inflation in the most likely of areas, the big-ticket items, appliances, furniture, tools, children's items. All of those things have picked up in price.
We saw a pretty rapid pickup in June relative to what we had been sort of seeing so far this year. And really practically everything rose this month. Some components set really big records.
Gross domestic product, or GDP, grew at a robust annual rate of 3% in the second quarter of 2025. That was up from a 0.5% contraction in the first quarter and driven by strong consumer spending.
Our economics team, they have modeled out an expectation for 0.8% GDP growth for 2025 in the fourth quarter. So this is not a recession, but a slowdown.
Combined with the first quarter's GDP figure, however, the economy grew 1.2% in the first half of the year, down from the 2.5% average pace in 2024.
What you see is a rate of growth that is slower than what it was in 2024, but isn't disastrous. It doesn't suggest that a recession is happening or that one is imminent.
The U.S. jobs market had been a source of strength until July. Job growth slowed to 73,000 that month, well below expectations. The Labor Department also sharply revised May and June's figures by a combined 258,000 jobs.
Well, it really was a stunning downward revision, and it really sort of confirmed something we'd already been seeing in the soft data, and that is that the U.S. economy had been slowing and been slowing fairly dramatically.
This is a problem for the Fed because it has a dual mandate of price stability and maximum employment. Keeping its benchmark interest rate too high could keep inflation subdued, but could also cause unnecessary damage to the job market.
This is the special situation we're in, which is we have two-sided risk to both of our goals.
The labor market has been pretty clearly slowing over the course of this year. It hasn't been collapsing. I think the labor market generally, for now, looks like it is in balance. And so the question from a central bank perspective is, how proactive do you want to be? The Trump administration has criticized the Fed for not lowering interest rates sooner while defending its trade policies.
We have a great thing going. I think we're going to have the richest economy you've ever seen.
But given the underlying weaknesses, the second half of 2025 could be even more unpredictable than the first.
Beginning of the fall, we're going to have significantly more clarity and understanding of not just how the market should respond to these tariff rates, but also what does it actually mean for the average consumer. And it's likely to actually start showing up as business owners can start to make well-educated decisions about how much they actually have to increase prices. We look for growth this year to be between 0.5% and 1%, which is below trend, slower than it has been for the past several years, but still consistent with a pretty soft landing in economic terms. If you can go through the sorts of events that we've gone through and the sorts of policy changes that we have and still have growth in that stays meaningfully above zero, I think that's a pretty good outcome.
Our expectation right now is for no growth in the second half of the year, sort of moving sideways, not enough to necessarily declare a recession, but it is nonetheless not the best of economic situations for most Americans as they look at it. The numbers suggest resilience, but the cracks are beginning to show. What do you think? Is the U.S. economy truly unshakable under Trump's tariffs, or is a slowdown inevitable? Let us know in the comments, and don't forget to like this video and subscribe for more honest economic analysis.